Problem 4-6A, I think, is a really nice one to look at when you're looking at correcting entries. Accountants all the time have to do correcting entries, especially when the clients do their own books, because when they bring them to the accountant, there's bound to be some mistakes somewhere. So it's very useful to be able to know, well, if there is a mistake, what can I do to fix it? And that's what this problem here, 4-6A, is getting us to be able to do. It's showing us that we need to be able to take a transaction, and there's three parts we're going to do. We're going to first journalize what happened incorrectly, back when somebody else did the books and they did it wrong. What was the entry? The second thing they want us to do on this one is, if that's what they did wrong, what should the answer have been if they would have done it right in the first place? And then we're going to do that. And then the last thing that they want us to do is, well, since they did do it wrong, and we now know the correct way, what's my correcting entry going to be? As you're doing these, I would keep a set of T accounts off to the side. I'm not going to be able to do it here and still be able to show my screen. But you will want to keep some T accounts, just real basic, nothing real special T accounts. But it's going to really help you, I hope you'll see, in being able to do this exercise. I'll do two of them. We'll do 1 and 3, just to kind of give us a good idea of what's going on here. Okay, so for the first one, cash received from a customer on account was recorded as $750 instead of what it was actually written on the check, $570. All right, so we made a mistake. We flipped a couple numbers. It doesn't say anything about the accounts being wrong. So we're going to assume the accounts. We have to assume the accounts were done correctly. So the first thing we have to think of then is, well, what accounts would they have used if knowing the accounts were correct? Well, we ask ourselves the first question, the debit question, what did the business get? That's pretty easy, hopefully, here. The business got cash, and I'm going to put that in here as my debit. Cash, I know it's really hard to see, but I'll make it a little bigger. And the wrong answer for our debit was $750. And then our credit question, how did the business get the cash? Well, we got it from our customer's account, which would be the AR account, accounts receivable. So we're bringing their account receivable down by the $750. So that was the incorrect entry. Now the correct entry, well, we know the cash and the AR were correct. Let's go ahead and put those in, because the accounts were correct. But the amount shouldn't have been $750. It really should have been $570 because we just reversed a few items. Now, if I'm doing T accounts, this is where I want to have my T accounts going. I want to show in the first T account, I want to show actually in my cash T account, I want to show a debit of $750. And I want to show a credit of $750 to my AR. Now, I want to, underneath that $750, skip a line or so, and draw a total line. And underneath the total line, I want the cash to show a debit of $570. And my AR to show a credit under the total line, under its AR total line of $570. Now, for the correcting part, what I need to do is I need to look at that cash T account and show that I have $750 on the plus side, but then when I'm all said and done, underneath the total, it should only be $570. So what do I have to do to cash to go from $750 positive to $570 positive? And hopefully you can see from your T account that we need to credit our cash by that difference, which was $180. And then do the same thing to the accounts receivable. My account receivable had negative $750, and it really should have only been a total of $570 negative. So I need to add back $180 into the receivable, my client's bill. And that's all there is to this example. Now it gets a little harder when the problem gets a little tougher, and that's what number 3 kind of looks like. Again, we'll want to keep some T accounts off to the side so we can visualize what's going on. The first salary payment for the month was $1,800, which included, so we paid money, but that included some work that was done last year or last month. $700 in salaries payable. The payment was recorded as a debit to salary and wages for $1,800 and a credit to cash. All right, so let's go ahead and enter in the incorrect. Our debit to salary and wages and our credit to cash. So I'm just going to abbreviate here, wages expense instead of salary and wages. And they put in incorrectly that it was $1,800, or at least part of it was wrong. And our cash, they put in as a credit to $1,800. So that's what we want to have as well on our T accounts. We want to have a debit to our wage expense as the initial entry, and a credit to my cash for $1,800 as the initial entry. Now I come down to the correct entry. What should it have been? This tells me, the wage expense of $1,800 tells me, or it appears that my workers did all of the work this month or this year. The $1,800 that they were paid all occurred right in this month. But that's not the case. Because it tells us in the problem 700 of that work came from last year, came from last year's or last month's wages payable. So that means only 1,100 really came from this month. So my wage expense should be only 1,100. So in the total of my wages expense, I'm going to draw a line underneath the 1,800. I'm going to put 1,100 because that's how much work was actually done this year or this month. The rest of the work was expensed last month. And I showed that I owed the money as a wages payable. So when I pay it, that payable is now gone. I'm reducing my wages payable. My credit then would show that I actually did pay the money, the cash, for $1,800. So underneath cash, I'll have a total that it should have been a negative to $1,800. You might think, well, it already was a negative to $1,800. That's true. So that means on cash, when I come down here to the correcting part, I'm not going to need to do anything to cash. Cash was already correct. It started with a credit of $1,800 and it ended with a credit of $1,800. No change needed to cash. The change that needs to happen, though, is my wage expense started at $1,800 as a debit, but really should have only been $1,100 as a debit. So I debited my wage expense too much. So I need to come down here and take away some of that wage expense and reduce it as my credit. It didn't show up very well on that line. Let me see if I can retype it in. And then if I look at my wages payable started out with 0. It didn't show anything, but my ending total was $700 needed to be subtracted. So what do I need to do to go from a 0 to a debit balance or a debit ending entry of $700? Well, I need to debit the wages payable to account for that $700 that was missing because it was done incorrectly. And now we're correcting it. There should have been a debit to wages payable for that $700 and a credit, or there should have not been so much in the wages expense. It should have only been $1,100, which that $700 there credit will get my balance to where it needs to be. Okay, that's all for problem 4-6A. The last thing that I do want to look at before we sign off, and I'm going to now pull up a financial statement problem. We're not going to go through the whole thing, but just to kind of give you an idea. This is exercise 4-17. What they've provided for us in this example is a whole bunch of accounts in no particular order. So we've got, I can just see up front here, liability and expense. There's another liability. Here's my cash. So they're all mixed up. What they want us to do now is provide and actually compute the income, the financial statements. So as you recall from our lecture, the first financial statement that you have to do is the income statement always. Now, whenever there's a line with no number column, because remember on the income statement, these are our subtotal columns, subtotal right here, and over here is our total column. If there's no dollar amount, this is just more or less a overview, just revenue, or something along those lines, whatever Wiley Plus uses. Now this tells me that this company has most likely two types of revenue account. So we look up, and I'm looking through, and oh, here's a revenue, service revenue of 6877, and then I had a rent revenue, 8828. So, and we do want to keep our revenues separate, so it tells the people looking at our business, just like the expenses, we keep those separate. It shows what we're spending our money on, or in this case, how we're actually getting our revenue, how's it coming in. Most of it's through our typical business. But then it looks like we look like we might be leasing out some of our building, maybe that we're using and collecting a little bit of rent. So in this column here, I'm going to simply just put in service revenue for the $60,877, and then put in my rent revenue for the amount, and then here put in a total revenue of whatever those two add up, something about 69. 6 or 7. And then I got another empty one here with no corresponding dollar amount, and that would be my expense category. And then we're going to list the 3 expenses that I have, or that I should have, it shows here. You see one here, salary and wages, a utility, and all the way over here we got a depreciation expense. So there's our 3, we're going to list them. And then over here in the total column, total up the expenses. And then our final number on the income statement, remember, is a net income. Or if it happens to be, it could be a net loss. And if it's a loss, we would want to put it in parentheses. Statement of retained earnings. Remember, we always start the statement of retained earnings with our beginning retained earnings. And you can find the beginning retained earnings up here in our chart of our initial balances. So the $20,715 would be right here. And then we're going to look at this year's adjustments. Remember, there's always 2. We want to look for the net income that we just got from our income statement. We're going to bring that down here, net income. And then we always subtract then our dividends. So we're going to subtract out our dividend, and we put that in a negative number because I want to subtract it. And then our total changes for the year, we add up our $2 amounts here. Take the income minus the dividends. And then our final amount, remember, is called ending retained earnings. So that ending retained earnings will replace my beginning retained earnings. The last step is the balance sheet. They want us to break it down like we did in the examples. Current and non-current assets. So here it tells us we're looking at the assets. So my first item here will be current assets. There's no line item corresponding with it. So current assets. And then I'm going to list my cash and my other current asset. If we look up and see what it is, most likely it's account receivable. And here it is, yes, accounts receivable for the $99.83. The rest of the statement goes just like normal. Hopefully you won't have much trouble as you go through that. Look back to my video on the balance or on the financial statements if you need more review for that type of problem. Okay, that will end our session for these 2. And we will start our next with brand new material looking at selling of goods using cost of goods sold. That'll be in a week after our first exam.